Hi, I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to my website, KalilaReynolds.com, to subscribe to our newsletter. You can click the link up here or in the description box below. Now come on, let's get this money.
First up, JMMB Group Limited is seeking to raise 6 billion Jamaican dollars. That's about 40 million US. They're issuing 2 billion new preference shares for $3 each, with dividends paid every month. We'll explain what are preference shares and whether this investment might be right for you. And later, the analysts weigh in on the latest market developments. The competition is heating up in the gaming industry, with Izizzi giving Supreme Ventures a run for their money. And on the international markets, Pepsi's fourth quarter earnings are looking good, even in a global pandemic.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Supreme Ventures Limited went on the defensive last week, days after its gaming monopoly tumbled. Maho Gaming, one of two new entrants to the industry, officially started operations on February 6 with its Izizi games. But soon after, several SVL selling agents claimed they were being threatened with termination contracts after registering to use their platforms to also sell games for Izizi. Nationwide News reportedly obtained termination letters for at least 2 agents, with one disclosing that Izizi was paying out more to agents per bet sold. Supreme Ventures has since denied the termination claims, adding that any termination of contracts is based solely on the realignment of their retail network, a project which started in 2019. The company also told Nationwide News that several scenarios are stipulated in the retailer contract that can result in termination. More Jamaicans were looking to borrow money during the September 2020 quarter than the previous quarter. According to the BOJ's latest quarterly credit conditions survey, credit demand jumped over 16 points between the June and the September 2020 quarters. According to the survey, the increase reflected a significant increase in demand for personal loans, due in part to individuals' optimism about the economy as more people returned to work. At the same time, there was an overall decline in the availability of credit due to risks posed by the pandemic. The survey showed there was no growth in the supply of credit to individuals and an obvious decline to businesses, except those in construction and electricity and water. Businesses are again feeling the effects of the pandemic, with the start of the nightly curfew adjusted from 10 p.m. to 8 p.m. at least for the next few weeks. The government revised the time along the gathering limit in response to the surge in confirmed cases over the last few days. Palace Amusements in particular had to suspend operations at its new drive-in theatre until Ash Wednesday, as the pictures that were scheduled to open last week were over 2 hours long. Box office at the theatre opens at 6 p.m. Meanwhile, the Jamaica Manufacturers and Exporters Association, JMEA, has come out in support of the changes. However, they have put forward a few recommendations for the future management of the pandemic, including a partnership with the private sector on testing, and a mandatory request for negative PCR tests for all incoming travelers 72 hours prior to arrival. JMMB Group is seeking $6 billion from the market through the issue of new preference stock at fixed rates of 7.15% and 7.35%. The offer of the 2 preference shares is priced at $3 per share and runs from February 16 to March 9. 1.5 of the 2 billion units are reserved for JMMB clients. The shares will pay out a monthly dividend starting April 19 this year until maturity in 7 years. JMMB says the proceeds from the shares will be invested in various business lines and specific projects to drive profit growth. JMMB currently has about 10 preference stocks listed on the Jamaica Stock Exchange in Jamaican dollar and US dollar currencies. The new issues will be denominated in Jamaican dollars. Regional credit rating agency CARICRIS has assigned an inaugural investment grade to ICT company PBS Technology Group. The company has given a local currency rating of JMAA+ and a foreign currency rating of JMAA. PBS Technologies bond has also been assigned Carry A in local currency and Carry A- in foreign currency. CARICRIS also assigned a stable outlook to its rating. CEO of PBS Technology Group Ian John says the rating places the company among the most credit-worthy institutions in the region. The company was formed in September 2020 following the acquisition of Massey Technologies by Musan, Jamaica.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, JMMB's preference share offer prospectus is out. We'll take a look. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. JMMB's preference share offer opens February 16 and is scheduled to close March 9. They're selling 1.5 billion preference shares at a rate of 7.35% to JMMB clients. Non-clients are being offered 500 million preference shares at a slightly lower rate of 7.15%. Both sets of shares cost $3 each and the tenure is 7 years. Now, if you're a bit confused trying to figure out what this all means, don't worry, we'll explain whether it would be right for you. I'm joined by JMMB's Chief Risk Officer, Damian Brown, and the Chief Country Officer for Capital Markets Jamaica, Carl Townsend. Hi, Carl. Hi, Damian. Good to see you again.
It's good to be here again. Thank you for inviting us.
The last
Good morning, Kalila.
I spoke to you both, you were promoting the APO. Now it's a preference share offer. So first of all, let's get just very basic. For those who don't know, explain what are preference shares and how are they different from ordinary shares?
So preference shares are different from ordinary shares. I mean, the main feature is that preference shares, they have a feature where you get a fixed, what we call a dividend, right? So contractually, that dividend will normally be paid regardless. Preference shares are really like a hybrid between ordinary shares and a bond, in that it has this fixed coupon rate that it pays. But unlike ordinary shares, in the event something were to go wrong with the company, it actually ranks ahead of ordinary shares. And it pays, as I said, this regular fixed dividend as long as the company continues to make a profit. And I would say that would be the main feature.
So those investors get preference in terms of repayment. That's why it's called preference shares.
Right. So, if you want to get technical, you would say in terms of a liquidation preference, they would rank ahead of ordinary shareholders, yes.
Right. But if you buy into preference shares, you do not have voting rights like ordinary shareholders do.
No, you don't. You have voting rights in very limited circumstances, one of which is if the company is going through difficulty and it's in a winding up position, you do get voting rights in that particular situation. Also, if the company does not pay that fixed dividend as it has promised you for a certain period, in our case it's 12 months, then voting rights will kick in. But outside of that, preference shareholders would not normally have voting rights.
And so for these reasons, preference shares are seen as less risky than, I suppose, purchasing ordinary shares. Is that right, Damian?
That's correct. You get a fixed rate so that you have a predictable income. And also, even if the company has fluctuations, as Carl indicated, as long as the profit is sufficiently large, you will get paid before any ordinary shareholder.
Well, let's talk about this actual share offer now. So there are two preference shares being offered, or two types being offered. You have a 7.35% and a 7.15%. Let's start with the 7.35%. I really want to get basic for people too, because we haven't seen this type of offer on the market in a little bit. I know JMMB has other preference shares listed as well. So what is the 7.35? Who is it for? How do you benefit, Carl?
So the 7.35% is for our existing clients. So these are, persons who own JMMB shares or who have accounts with any of the JMMB Group entities. So those individuals or entities will get that rate of 7.35%. Unfortunately, if you're not a client of JMMB, you benefit from the 7.15%. So really what we're doing, we are giving a little extra to our existing clients.
And most of the shares are reserved for those JMMB existing clients, right?
Yes, that is correct. So the offer, you have 1.5 billion for existing clients and 500 million shares for non-clients.
Damien, talk to me about dividends, because this offer has a particular benefit. You get dividend payments monthly.
Yes, that's correct. So the entire interest payment is 7.35% per year. If you divide that by 12, then the equivalent amount is paid out each month. So for those who like to have the feel of regular cash flow coming in, this is an attractive offer.
I know JMMB ordinary shares, you guys also pay dividends. How is it different from the dividends that you pay to an ordinary shareholder?
So the rate of dividends paid relative to your investment is much higher in this case at 7.35%. It is fixed for the life of the preference share, while for ordinary shares, that is dependent on the level of profitability of the company and the decision by the board to issue ordinary shares. And in the context of the preference shares, as you noted earlier, you get it paid on a very regular basis of monthly, rather than waiting for a dividend to be declared by the company and be paid. In JMMB's case, that's normally done twice during the year, but there's no guarantee. That is always subject to the discretion of the board.
But in this case, it is guaranteed.
Definitely.
So this is a good investment for people who prefer dividend investments, who like those dividend payments.
Definitely, and anybody who likes to have regular cash flow, this is a good investment in terms of having access to that at a point in time.
You're going to add, Carl?
No, so what I was going to say is that this is where the hybrid of the preference share comes in, because it is like a fixed income instrument where you know what the rate is, it's very predictable, and as we would say in Jamaica, you can put your pot on fire knowing that you're getting that 7.35% per annum paid to you each month.
But it is only for a fixed amount of time as well. So like you said, like a hybrid, it has an expiry date, and that is in 2028. This is for 7 years. So
Exactly.
what happens at the end of that 7-year period?
So at the end of that 7-year period, what we will do as JMMB is that we will redeem those shares, or it could be the case, as we've done in the past, that we'll issue new shares that will pay out these existing shares. But in any case, at the end of the 7 years, you will get your money back, which is what people want to hear. At the end of the 7 years,
you get your initial investment back.
Exactly. Yes.
So it is somewhat like a loan or like a bond.
Right. So as I said, it's a right. So it's a hybrid, right? So it has these features of a fixed income investment like a bond, where you have this predictable guaranteed coupon, and it has a defined maturity date. And because it's a share, it has that feature as well. You do have some voting rights if certain eventualities were to take place. So it's a nice hybrid, and we find that our customers and our clients like this kind of instrument.
Right.
Because they get the predictability of the cash flow from a fixed income perspective.
When's the last time JMMB issued preference shares?
In 2018.
So 3 years later. And the last time I mentioned at the start of the program, the last time I interviewed both you two, Damien and Carl, was the APO, which was in 2019. You guys raised, what was it, 12 billion?
12.4 to be precise.
12.4.
We took 12.4. There was subscriptions significantly in excess for that, right?
If I remember.
Yes.
And
very much oversubscribed. Mm-hmm.
Definitely. So our customer base has asked for additional participation. We will not be issuing ordinary shares at this point in time, but we think that this offer is a good win-win situation, wherein that customers can get an attractive fixed rate, which works well for a specific customer type and portfolio decision, and it will still allow the company to continue on its growth strategy. Our group CEO said at our last annual general meeting last year that JMMB is poised for growth, and that during the times of disruptions, which is what we are undergoing now, unfortunately, with the impact of the COVID-19 virus, that opportunities do arise, and that looking over the medium term, we are positioning positioning ourselves, take advantage of those opportunities to provide value both to our clients, to our various shareholders, and to whichever entities and individuals that we engage with.
But tell me something. I mentioned the APO in October of 2019, raising $12.4 billion, which was, I think at the time, the largest that had been raised in an APO. So why come back to the market so soon with another raise, this time for $6 billion?
It is in the context of our strategy, which we have had consistently. If you go back to as far as 2012, when we would have taken control of the Capital and Credit Financial Group, and therein taking control of its merchant bank and turn that into JMMB Commercial Bank currently, which is one of the fastest growing commercial banks within the Jamaican environment, as well as our continued growth across the region. This is just a continuation of that path. If you look before our last two preference shares at 2015, our annual profit at that point in time was 2.05 billion approximately. For the last financial year, our profit was 7.07 billion, and we have had a significant growth, almost doubling on our asset base. You would be aware that we have a strategic investment in the shares of the Tajikor Financial Company, which we expect to provide material benefit to our shareholders over time, and that we still see additional opportunities that we are positioning ourselves to take advantage of to continue our growth path in the context of a very consistent strategy.
Yes, indeed. 2 billion to 7 billion in profit in 5 years is quite remarkable. We do see the growth that JMMB is embarking upon, and as shareholders, we're quite impressed with that. But tell me about the past year, because COVID-19 has just thrown a monkey wrench into a whole lot of businesses, especially in the financial sector. Many companies in the financial sector have taken a hit due to the pandemic because customers have had to go into forbearance or have to renegotiate terms of loans because they can't make the payments. Tell me how the pandemic has affected JMMB.
In the context of our financial performance, we consider it to be quite commendable. Up to the financial year, which would be our 6 months of our financial year at end September, our profits were slightly down. And in the context of the COVID-19, as you said, where other financial institutions would have had material impacts, we consider that a very credible performance. If you look in the context of our continued growth, our clients have continued to grow with us materially over the 6 months period. And what I would say is that the nature of our strategy, which has been to diversify across business lines, both in terms of banking, security brokerage, and other activities, and across territories, including Dominican Republic and Trinidad and Tobago, despite the global impact of COVID-19, it has paid dividends by limiting the impact on our financial performance. And what I would also highlight is that JMMB Group was independently rated as investment grade by CARICRIS in October of last year. And that was in the context of the COVID-19 implications going forward. And that's a representation of where our business model is and the expectation that we will remain profitable and provide good results over the next 12 to 15 months. So the prospects for us in terms of how we are uniquely positioned is definitely good.
At the same time, many companies, the buzzword over the past few months, past several months has been pivot. Many companies have been trying to pivot, finding different ways to reach customers, digitizing, moving things further online. How has JMMB done this in the past few months?
The first thing that we have done is to take care of our customers. That's the basis on which we have grown over the years. And that's the promise that we have made. So in terms of ensuring that from a financial planning perspective, that we could help to inform people and to reduce their fears and anxiety through information and financial planning sessions, in terms of those who may have credit facilities through our bank or otherwise, to provide that kind of interaction to help to guide their business, and where there were disruptions, similar to other institutions, to provide some kind of temporary reprieve to allow them the time and the breathing space to adjust their own operations and their own outlook in line with the ever-changing reality of the pandemic.
So has there been a concerted effort to move more online, to become more digital?
Definitely, and that is something that we have welcomed, both in terms of managing the public health implications of face-to-face interaction, and also making it easier for our clients who do have that access to be able to conduct business with us through the platforms and the modalities that they choose. As of now, clients can easily open accounts through online processes, and they can execute their transactions through our online platform.
You can open an account entirely online?
There is an interaction where we call back, but the process, you don't have to come into branch.
Lovely, lovely. I noticed that the trend among some of your competitors, the larger ones in particular, Scotia NCB, has been closing branches and doing the whole online only thing or the digital only branch, encouraging people to use the ATMs. Is that a direction that JMMB is going or considering going as well?
Our direction has always been what's been in the interest of our customers. As my group CEO told me one time, that we take care of our customers and then we find a way to make money while doing that. So there will be different options to customers. During the pandemic period, clearly we would encourage customers to limit any face-to-face interaction for the safety of all involved. But to the extent that clients choose to have face-to-face interaction, JMMB is deploying in a manner that will facilitate that, as well as facilitating those who prefer a more online and time-efficient approach. So we will cater to the needs of all our customers.
So you're closing any branches?
No, we're in growth mode, and that's the context of the preference share. We see significant opportunities. We have a lot of relationships, and I think the way that we have conducted ourselves as a company over our many years of existence, different companies are willing to partner with us and to engage with us in terms of opportunities going forward, and therefore we are on the growth path.
Carl, what do you see as the biggest opportunity for growth in the industry right now?
As we look across the landscape, there are many different opportunities. I don't know if I necessarily want to single out any particular one, but of course, we are a financial services group, so we're always looking for opportunities within that space, not just within Jamaica, but also across the Caribbean. As you know, we are in Trinidad and Tobago, we're in the Dominican Republic, and we're looking at other territories. And I think at the appropriate time, we'll make those appropriate announcements that will show to our clients and our shareholders, the kind of opportunities that we're looking to take advantage of. But we're not just focused on Jamaica. We are looking across the entire Caribbean and Central America for wherever those opportunities might arise.
Sounds like you're in acquisition mode.
I leave that to the group CIO to say some more. But yes, as you did mention, the whole idea is that we are in growth mode, and therefore, as you know, there are two ways to grow. You can grow either organically, or you can grow inorganically, and you would have seen us take an inorganic step in 2019 when we bought a 22.5% stake in Sagicor. So, the idea is that you look for more opportunities like that where we can add shareholder value and make our shareholders happy.
How has that investment paid off, by the way, in Sagicor?
In terms of the impact on our first year financial statements, it was indeed positive. As you noted earlier, that COVID-19 has disrupted the short-term performance of different financial entities, including Sagicor. So they would have had a negative impact during this year, but still remain profitable for the year. And we expect that they will grow from strength to strength going forward in the context of the general expectation that the impact of the pandemic will be less for this year and future years. So we're very positive about the strategic impact it will have on our performance. But that will be more so the upcoming financial year.
Well, before I let you guys go, tell me how people can apply for this offer.
You can apply through our online portal, the JMMB Moneyline. And for those who aren't clients, you can just go to jmmb.com, click on Jamaica, and you can establish an account and get access to Moneyline. Also, NCB is a selling agent as well, and you can access the offer through NCB's Go IPO platform.
Is it being sold on any of the other regional markets?
No, this is a Jamaica only offer. So it's only open to, persons domiciled in Jamaica. And as Damien said, you can apply on Moneyline or on NCB Capital Markets Go IPO platform.
All right. Thank you very much, Carl, Damien. All the best.
Thank you.
Thank you, Kalila.
Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency, insurance made easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange advanced, with the combined index gaining less than 1%. 104 stocks traded across both the main and the junior markets of the JSE for the week ending Friday, February 12, 2021. 53 advanced, 42 declined, and 9 stayed the same. 157 million shares changed hands on the Jamaican dollar market, totaling $906 million. Pulse Investments traded the most, taking up 23% of market volume. The stock lost 5 cents to open the week at $4.88. Trans-Jamaican Highway traded the second highest, with people buying and selling nearly 16 million shares in the company. The stock gained 4 cents to open the week at $1.35. And Wigton Wind Farm ordinary shares rounded out the most traded, taking up 9% of market volume. The stock lost 3 cents to close last week at 72 cents. Now let's see who had the biggest gains. Siboney Group jumped nearly 46% to close last week at 51 cents. Cygnus Credit Investments JMD ordinary shares rose nearly 21% to close last week at 15 cents. And rounding off the biggest gains, QWI Investments stock advanced nearly 16% to open this week at $1.17. On the losing side now, Key Insurance Company fell nearly 18% to close last week at $5.01. Supreme Ventures fell 14% to end last week at $14.69 a share. And rounding off the biggest losers, 138 Student Living Jamaica Variable Preference lost 14% down to $5.10. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment analyst at Proven Wealth, Julian Morrison, equities trader at JMMB, Clive Charlton, and business writer at The Observer, David Rhodes. Hi, Julian. Hi, David. Welcome back.
Hi,
and hopefully Clive from JMMB is able to join us. I always enjoy his contribution. So over the past week, the airwaves have just been, I feel like Izizzi buy out every radio station because all I hear is Izizzi, easy like 1, 2, 3, over and over and over that jingle. Those jingles have just been playing. So they're making their presence known that there is a new lottery player in town, a new gaming player in town, Izizzi, owned by Maho Gaming, giving Supreme Ventures a run for their money. So David, let me hear you first, your perspective on how the entrance of this second player and soon to be a third player as well. What's that one called?
That's called Goodwill Gaming, which is Lucky Play.
Lucky Play, yeah. They're supposed to be entering soon as well. So how will all this competition affect Supreme Ventures, which is a listed company?
So, SPL came out around 2004, or they're listed around that time, and they have been the only lottery player, we call it almost 2 decades in a sense. So they've had this relatively free space that they've been able to play with for all this time. And in Jamaica, you have very few large players at times. So, but now you're seeing 2 new players. Well, Izizzi got in the real light fully, and waiting on Lucky Play to come in, but Izizzi has come in. And Izizzi is not joking, because you have seen Izizzi, all this branding, all this media coverage and whatever. And the principles behind it, you'd say even more.
Yeah, some heavy hitters.
William Mahfood, Paul Scott, Lisa Ann Hu Harris.
Michelle Myers-Main.
Yeah, which is Mark Myers' wife.
Lisa Ann Hu Harris is the daughter
Paul Hu's daughter.
Paul Hu, one of the founders of Supreme Ventures, right?
And you have other quiet players around the corner as well. So it's pretty interesting. And it's going to have a significant impact on SPL in the sense that, for one, you're hearing relative controversy about SPL with their current retailers, about signing up competitors. So for those who don't understand, the way SPL and other gaming operations around the world work in operations is that they are the brand, they are general collector of all these sales, but they utilize sub-agents or retailers who actually are the ones who collect the funds and engage the general populace. So what you've seen is that before Izizzi and Lucky Play, you just had SPL, and you always had SPL outlet around Jamaica. And as people said, one thing that's going to happen, Hurricane, Olympics, Prime Minister, you're going to say SPL ad.
Mm-hmm.
Except
no matter what beauty pageant is on, that Cashpot will draw.
Exactly.
They will interrupt the Prime Minister for Cashpot.
Exactly. So right now you're seeing Izizzi come in, and what it's going to do is going to have smaller contribution to SPL because you only have a fixed population, because this is necessarily like a quote-unquote Caribbean company or cross-state thing like in the United States. Jamaica's a fixed population, and it's easy and looking for internet at the best time because you're in an economic recession. So you're going to have more inclination for persons to see how best they can earn more money. Some of us look through stocks, some of us look through real estate, some of the bits of the outside also, but for some persons, Cashpot was the way they send their kids to school, pay the bills, buy food. And the thing is, because of the competition that's come in, SPLs actually increase their payout. So it was 260 the prior week. I'm talking last week, the prior week. And last week Friday, I signed the Observer, 280. And then taking the Observer, 305. Mm-hmm. Just because new competitors have come in. And you're hearing that SPL was only giving 5% of sales to retailers. Retailers are saying that, hey, Izizzi offering us a higher payout. So you're seeing a lot of dynamic happening right, and it's good in the sense that you're going to see more competition and dynamics in the space. One thing that might happen is that you're going to see probably less tax revenue going to the government, which is just a side effect of, it's more competition, but overall, it's still healthy for the environment.
So, Julian, how has the market responded to the introduction of this competition? I hear there was a long sell queue for Supreme Ventures.
Yes, based on what we're seeing up front, the market has already begun to respond, which means that our market is becoming more efficient, informationally efficient. So that's a step in the right direction for our markets. However, in the case of Supreme Ventures, it's still early days yet. Supreme has a very strong balance sheet. They have very high cash balances. So it's a matter of how they plan their next set of capital projects. How do they use their treasure chest of financial resources to actually respond to this competitive pressure? So pretty much, it's like having a boxing ring. So it's round one of the fight. I don't believe it's going to be a first round knockout for SPL because of their strategic advantage. They are the Goliath in the space still, and it's a matter of their response. So we're all waiting for that response. I think it's good for the market overall though, in terms of the end users, the customers, and also think about the possibilities. What if these two entrants list on our market? Mm-hmm. That's more capital that can be raised and more people can get hired, and there are many other domino effects from there. So let's see the innovation and the product build out from there.
So speaking of the response of SVL, David pointed out some as well. So they've increased their payout for Cashpot, and I suppose there are other lotteries as well. They've increased the amount of money that they give to their retailers. And we've also noticed Clive. By the way, welcome, Clive. Good to have you.
Yes, thanks for having me. Sorry that I'm late.
We've also noticed that they have been diversifying quite a bit, I guess, in preparation for this day. They have gone into business services. They've expanded as well. So they've launched operations in Guyana and I think South Africa. So they've been really branching out a lot and diversifying offering. They've just purchased, David, remind me what it is that they just
A
bought.
small microfinance company.
Microfinance, right. So they're really diversifying. So Clive, do you think this strategy is going to be enough for them to maintain and possibly even grow their top line in the face of all this new competition?
I think it's largely a matter of the expertise they have, which is the in-house expertise, the management, and the resources. Now, Supreme Venture has resources. It's a cash-driven company, the nature of the business. I mean, it's one of Jamaica's largest revenue-generating company. Next is probably nearly over 40 billion Jamaican dollars, nearly 50 billion Jamaican dollars. That is good. But, at Supreme Ventures, again, it has always been a sort of monopolistic in the betting and gaming world. That is, it has probably 90-something% of the gambling business in Jamaica. That is fairly monopolistic. The question is, they seem to have issues at the top management level. They're not able to hold on to talent. For whatever reason, we don't know. I personally don't know as yet, right? That is a problem. Now, when you're diversifying outside of your niche area, you're going into microfinance, business outsourcing, all these things. The question is, can you juggle all these baskets? You see? So that is a concern. Now, there's a new major player in your niche market coming in, you see, that I'm sure has the capital, I'm sure has the latest technology, you see, and I'm sure will come in with something that is very competitive, you see. I think Supreme Ventures can respond to that. I don't think that will be challenging and difficult for them. They have the in-house expertise in terms of gambling and this nature of this business. They have the resources, the money, and they can source the technology. And they have restructured and reorganized somewhat. But the thing is that they are so diversified. Do they have the in-house management leadership to run all these entities, these mix of entities at the same time? Granted, these new entities, outside of the expansion in gambling in Honduras and Barbados, in Guyana and South Africa, outside of that, these new entities make up a small percentage, perhaps less than 2.5% of their total gross revenue. So they won't impact them as yet. But there's going to be a big diversion of management attention, from their main business line to growing these new entities, but Supreme Ventures is highly profitable. I think the price is reacting. The bids and offers are quite thin on nearly every stock, including Supreme Ventures. Thin meaning that people are quoting to buy not 100,000, 200,000, 300,000, but 5,000, 10,000, 15,000 here and there. And that's kind of normal in the market space, especially in our market and at this time. But I believe that there's a general market downturn. Well, there's some friction on the market, and I'm not too sure that people are reacting necessarily. The price of the Supreme Venture price declining is reacting to Izizzi, the new competition. That competition is not publicly listed. You see, again, can it take away gambling resources from them, money that people gamble? The nature of gambling, the psychology of gambling is that more money will go into the gambling sector rather than shift one, draining or cannibalizing the next.
So it will become a bigger pie, so to speak.
Rather
than cutting into SVL's pie, they just create a bigger pie.
A bigger pie. And I think if Izizzi is creative enough to come with something new, just a little twist, you see, what sells in an economy like ours is these small jackpots, I'm not familiar with the names, but these that are called every day, when like 3,000, 4,000, 5,000, that sells. So if they can come with more of those. I mean, the big pot sells, that is what brings in the money in the pot, you see. But more of those to kind of gain attraction in the market space.
I heard their ad said they have a game that goes every 4 minutes or something like that.
Yes, quickie. And some other, games, right? So that, to me, is creative and can give them some traction.
Wow, so that is definitely one to watch in 2021, how that plays out. Go ahead, David.
So for Mayberry, 6% of the dividend income comes from SVL. So you see that close intertwined nature between Mayberry and SVL right now, in the sense that if SVL has to decline, so does Mayberry's general income base as well, and the overall balance sheet if the stock price declines on the same end. And for Izizzi, they also have the former president of IGT Technologies, which is the company that provides technology resources for gaming. So as I said, you have Lucky Play, which has Ian Deere Tourism. You have Izizzi, which has so many heavy Jamaican billionaires. And then you have SVL, which has Mayberry saying, hey, I'm not going to know how to fight. So it's, as Clive pointed out, it's going to be a very, very fun time going forward.
A fun time for the observers in the space like us.
And the government.
Some popcorn.
And the government
yes,
who will be reeling in tax
revenues.
from this. Yes.
The revenues,
revenue,
let's not
yes.
forget the revenues. So
Yes.
Clive, what else can investors look out for in this first quarter? What are you paying attention to?
Okay. The market moves in cycles, and this cycle, usually this quarter is a good quarter, a cycle, part of the cycle. Why? Several reasons. I'll go into that. It's year end. December, most companies have year end. People anticipate results. You know, again, there's an exception to everything, right? And the big exception is last year, COVID. But let's look at it. People expect financial year end. Year end is a consolidation of everything that happens throughout the year. And usually the best happens in the year end. Fine. People expect a broad management discussion and analysis, which is the broad strategic objectives of each of these companies going into the future. And usually, of course, you state the good news, and you position yourself to act on the good news. The first quarter, January to April, is usually a heavy dividend declaration period. You see? So usually the market does well. Volume increase, but we notice how thin the market is now, and a few prices have declined. Some ran away earlier this year, in January, and then you see them dipping like a Seprod and Grace. You know, Seprod will not too, I think is a technical thing where people just, somebody came in and just jumped the price up, especially with these new online trading platform, where I think people don't understand the market, so they'll post a high price, drive it up, and then it falls back down. So expect that. However, COVID, though, would have impacted the market. So I think a lot of investors do not expect exceptionally good year-end results. And this is why right across the board, quite a few stocks are falling off, stock prices are falling off. Remember, these results are not yet published, but people buy price in anticipation of. Also, with the dividend declaration, persuasive, the term I want to use, agreement with BOJ, where financials and the financial holding companies, you know, for example, a Sagicor is not directly a financial company, but it's an insurance and it has a bank. Panjam, through that same route. Many of these companies are holding back, or have been holding back on dividend payments. And with this resurgence in this new COVID variant and the renewed lockdown in Jamaica, you know, if you want a better word, lockdown, I think the squeeze and tightening on dividend payout is going to continue in the foreseeable future. I say foreseeable meaning this year. I can't go beyond, right? So I think the investors are reacting to that, you know. What I would say, though, that prices are good. Some companies fundamentally have been doing well. We have the Grace, we have the Jamaica Brawlers, we have the Sepa that was doing well. Sepa is a little overpriced. I would wait until the price fall back a little before I jump into Sepa, you know. However, of course, DTL, which has its APO recently and
2 times oversubscribed.
Exactly, and they are just returning cash back to investors we see them placing some of it in the market, especially in the same company, which is expected. You know, when you get 50% or 30% or 40% of what you applied for, you're going to go in on the tail end to buy it back in the marketplace. So see that happening. So the anticipation, though, I think moving into the second half, latter part of this year, is fear to good. You know, I think we have a good grip on this COVID, apart from, of course, the occasional break. I wouldn't say occasional, serious, but occasional breakout, you know. I still think we have a level of control, but I have a few stocks I believe will do well. I think the financial sector also is going to do well because many of their assets have begun to revalue and expect further positive revaluation throughout this year. You know, many of them are reorganizing. That is this new digital means of doing business. Many of them you can see a significant improvement and infusion of this type of thing in their operations that should create more efficiency. You know, but what I noticed, though, especially the manufacturing distribution companies, the food conglomerate like the Lasco distributor, Lasco Manufacturing, last year especially, we started with Seprod, Dermont Trading, Grace. Yes, the top line increased for Grace, but many of them efficiencies, you know, they were really able to tighten up their cost structure, and this showed right through their bottom line. That is the profit. So I think the market is fair to good this year. And I think people should take advantage of the lower prices now by buying, but we'll buy cautiously. We'll come in, average in. That is, buy a little now, buy a little month end or 2 months from now, buy a little this quarter, buy a little the next quarter. And that is how we enter the market. And look at dividend yield also. Dividend yield is much better. In fact, the average dividend yield on the market is better than if you put $100,000 or $200,000 in some savings account.
You've given us a lot to think about there, Clive. So, Julian, let's look at the international markets now before we wrap. So you have your eye this week on Pepsi. Why?
Well, many times we make comparisons between Pepsi and Coca-Cola. And right now it's trading at around 134.16. It has a PE of about 24 times, sorry. So the revenue, it has increased year over year, 4.78% to around 70 billion. And the net profit is actually down, however, by about 2.65%. And that's because operating expenses crept up. So operating expenses hit the company because of some of the challenges around COVID-19 and the shock. However, the operating cash flows are up 10% year over year. So this is their full year results. And what also jumps out is the fact that they borrowed more to retool. So they started to invest more in building up their inventory and building up their payables. So they're anticipating greater demand. And they actually fueled that partially by borrowing. So their borrowing increased 38% year over year because the company is essentially retooling and anticipating greater demand on the back of further economic improvements, improving labor markets, people consuming consumables such as Pepsi, the drink itself, and also other products in its portfolio. The highlight, however, is the fact that during the lockdown period and many times when there are long instances of people staying at home, people doubled down on their appetite for snacks. And Pepsi actually invested heavily in their snack division, particularly Frito-Lay. So they benefited from that and it offset some of the stress from the other business lines. So even though Coca-Cola is around $50, they're at a PE that's higher than at Pepsi, which is at $130 around that neighborhood. It trades on NASDAQ. The dividend yield is around 3%. I think in terms of risk, it's about in the middle. I would say moderate to high risk in terms of their leverage and the fact that they're in a competitive space. But it's a good growth stock that still has some runway and it definitely pays out a fair dividend. So it's somewhere to look, but it's an interesting business that still has a lot further to go.
All right. Thanks, guys. All the best.
Thanks again, Khalila.
Well, thank you, Khalila.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com and turn on those post notifications so that you can be the first to see all of my other features. We want to help people learn more about money so we can all get this money together. Now this week on Money Mondays JA, we'll be talking about investing in the foreign market, in US stocks in particular. How can you do it? On Money Moves JA, Dr. Knut Thompson is back for the final of his 3-part series on leadership. We also have a special episode of What's in It for Me this week. Follow me on Instagram and Twitter at Khalila Ray and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial information you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock because investing is the new sexy. So let's make it cool to talk about money. I'm Khalila Reynolds. Stay safe.
Let's get this money.